Welcome to Srihari's lessons. Hope you enjoy your time here. Continue listening and supporting. Hello friends. Let us discuss about income management in this chapter. The goal of personal finance management is to become wealthy and rich. Hope you have listened to previous chapters and are having continuity. As mentioned earlier, to create wealth based on the principle money makes money, money is the raw material. To create this raw material called money, you need savings. Savings can be created only when you have a surplus, that is, portion of your income more than portion of your expenditure. This is to explain and imply that income is the source of wealth generation. Therefore, let us keep income management as the first topic of our series. There are two major categories of income in one's life. First is called active income and the other is called passive income. Active income means money earned through one's active efforts. When I say efforts, this can mean the time and energy spent by a person, in return earning an income for the same. In philosophy, there are only two real or permanent things in this universe. They are time and space. The truth of this or applicability of this should only be discussed in a separate topic or a philosophy classroom. For this topic of income management, this is relevant to the extent that in order to generate active income or earn money, one has to spend their time and space. It should be understood that these are not in any way directly or indirectly proportionate elements. That means the effort spent and money earned cannot be directly correlated by normal human level definition of effort spent or money earned. This will require a much deeper understanding. Let us look at a few simple examples. If you have seen a manufacturing company and understand the organizational hierarchy, a loadman loading the packages for transportation with all his physical work earns X amount of money. Same time, an accountant or a clerk keeping the records for these packages earns 100 times the X amount. Using the same logic, let us take the example of a restaurant business. The worker cleaning the tables earns X amount of money, and the cashier sitting at the counter and collecting money earns 100 times the X amount. We can keep discussing thousands of examples like this, comparing two job natures or job profiles and the salary earned on the same. At the other side, we also have a case of like comparing the accountant earning 100 times the X amount. The CEO of that company will be earning 100,000 times the X amount. One thing is that the accountant or CEO are depending less on their physical efforts and more on their mental or intellectual efforts. At the same time, reality shows one CEO in one company is earning 100,000 times of X amount, whereas CEO of another company of same size earns 200,000 times of X amount. In the minds of a naive person, we can easily explain this as a justification that the loading man uses more physical energy and the accountant uses more mental or intellectual energy. Does it imply physical efforts earn less money in relative terms compared to intellectual energy? It does not actually work that way. The simple logic for this, as per my exposure and my experience, is that the fundamental economic factors of demand and supply working together. Let us say demand is what the money payer expects from the money receiver for an offered remuneration. Supply is the time and effort offered by the money receiver for an expected remuneration. It can be looked at from a reverse perspective also. That is, demand is what the money receiver expects to receive for giving a certain amount of time and effort. Money payer supplies the money required by the money receiver for the time and effort they are giving. Therefore, the definition of what is demand or what is supply depends on from where we see whom. That is a perspective. In other words, there is a cross working of demand and supply since both the parties involved offer something and expect something back. When I say money offered, it has to also be looked at as a combination of money or money kind. That means it will include quantifiable or unquantifiable forms of remuneration. This series is about personal finance and hence the focus is on money. Same way, when I say time and effort offered by the money receiver, it will actually drill down to skill sets offered. Skill sets refers to the talent, time, effort, quality, specialized skills, etc. etc. These skill sets are sometimes natural or inborn. Some of these are acquired through education or academics. Some are acquired through working experience or exposure. All these combined together along with one's time and effort to form what we can call as skill sets. This is a lengthy explanation in the context of this video. However, this demand supply mechanism and skill sets are very important to understand income management. One has to use their relevant skill set at a relevant place at a relevant time to maximize the earning. A doctor's earning is much higher in a hospital business than in a restaurant business or some other business. This is simply because the skill sets of a doctor are more relevant in a hospital than in a restaurant. I would like to bring a short story here. There was a CEO of an automobile company going on a trip with his family. In a rainy night, they were driving through a forest road. The car got stuck midway. The CEO, with his efforts and limited knowledge, could not identify or rectify the problem. At that time, an old man came walking along the road. Noticing the CEO's halted car, he came offering support to them. On CEO accepting, he went to look into the bonnet, and after 10 minutes of looking at it, using the stick he was carrying, he pressed and tapped at a part near the engine, and the car got started. The CEO wanted to make a payment to the old man. The old man, let us say, asked for $1,000. The CEO was shocked and asked how that simple tapping with a simple stick is worth $1,000. The old man smiled and answered, the $1,000 was not for tapping with the stick, but the money was for knowing which place to tap and how much impact force used in tapping. Along with that, to be available at that rainy night time to do that tapping. This is what is called skill set. This story is used to explain the relevance in respect of time and skills and place combined to maximize proper usage or application of skill sets. Let us continue this in part 2. Welcome to Srihari's lessons. Hope you enjoy your time here. Continue listening and supporting.